Hello everyone. For today's market outlook, we are going to be looking at the gold market. And going into the remaining days of the week, buyers are still maintaining control, but price has just reacted from a new resistance around 4,435, causing a retracement back into 4,360 area, while market participants are preparing for important US inflation numbers scheduled for later in the week. So let us begin from the 4 hours time frame and see what is going on in this market. Looking at the chart here, the overall structure remains bullish, right? From the beginning of August, we can see buyers gradually producing higher lows and pushing price towards higher level. Now, look at this area around 4,310. Price struggled around this level earlier, but towards the end of last week, buyers produced a clear breakout above it. And that move you see here was supported by weaker US NFP figures, which reduced expectations for further aggressive interest rate increases and also helped improve demand for gold. And importantly, price has remained above this zone since that breakout happened. This is why 4,310 is my key level for the remainder part of the week. As you will see here, it has moved from resistance into support, and as long as buyers continue protecting the structure, the wider bullish tendency remains intact. And from here, we can see buying pressure has continued, and we saw price eventually tested this new resistance around 4,435. But notice that as soon as price tested that zone, we saw sharp rejections happen. Buyers in fact struggled to extend beyond that level as rising oil prices, renewed inflation concerns, and push US Treasury yields higher. And because gold does not pay interest, higher yields can reduce some of its appeal, which helps us understand why buyers struggled around this area. Now, let us scale down to the 1 hour time frame because this gives us a clear picture into what has been happening and what we should be watching from here. Connecting these higher lows formed since the beginning of August gave us this ascending trend line, and this captures the strength buyers have maintained throughout the move. Now look at what happened between Friday and Monday trading session. Price became range bound between approximately 4,310 and 4,363, and that range showed a period of indecision as traders digested the weaker employment numbers and also looking ahead to this week's inflation figures. Now, since buyers tested the 4,435 followed by the reaction from this resistance here, price has returned just exactly around that trend line, and this is where things become interesting. Price action is now sitting around the same area as the ascending trend line and the 4,363 zone. So rather than trying to predict where gold goes next, this confluence gives us a practical yardstick for the remaining days of the week. Now, if buyers continue holding above this zone and the ascending structure, we could see another attempt towards 4,435. And a breakout retest above this 4,435 will show that buyers are extending the current bullish structure. But if we see a breakdown and retest below both 4,363 and the ascending trend line, that will tell us that short-term buying pressure is weakening and could bring our 4,310 key level back into focus. This becomes even more important because US CPI comes out tomorrow, Wednesday, followed by PPI on Thursday. Both can change expectations around inflation, interest rate, and treasury yields very quickly. So as market participants position around these releases, we could see some choppy or sharp two-sided movement before a clearer direction develops. And for anyone holding a position right now, this is the kind of environment where protecting your gains and managing risks become particularly important rather than assuming that the existing trend will simply continue. So for the remaining days of the week, 4,310 remains my major structural level, while 4,363 gives us the immediate yardstick for whether buyers are still maintaining control. Let's see how the days ahead unfold. Until we meet again, trade safely, manage your risk, and I'll see you again next week.